I'm here with experts from BDO's deal advisory team to talk about M&A mid-market activity for the year and perhaps their perspectives for the year ahead. I'm joined by Andrew Begley and Daniel. Hey guys, how are we?
Yeah, thanks for having us.
And down the line is BDO's National Deal Advisory Leader, Andrew Grace.
Kia ora, Madison.
Andrew, what are some of the common themes that you've seen in deals around the country this year?
Oh, look, Madison, 2024 has definitely been a slower year for M&A with lower levels of activity. We're seeing deals taking a lot longer to complete, and in many circumstances, deals have not completed due to various issues with low profitability. We're also seeing a much higher level of distressed M&A where businesses are forced to sell through either receiverships or liquidations or corporates having to raise capital.
Daniel, you would agree with that?
Oh, definitely. I think in 2021-22, we saw a high level of stimulus from the government into the market, which meant there was a high volume of deal activity. There's an element of FOMO, so to speak. You know, people didn't want to miss out on assets, which drove M&A activity. Then coming through that cycle, the market was very hot. Inflation rose, and then we had to counter that with interest rates increasing, which has meant where we are today with volumes fairly muted.
Andrew, deals are taking longer to complete. In some instances, people are even putting pens down on some deals. Why do you think that is? What's sort of scaring people off and making it take a bit longer than usual?
There's a lot talked about, but I think the one word that sort of sums it up from our perspective is uncertainty. So, with the environment, the uncertainty around earnings, what's the go-forward position of businesses? You know, if you've got earnings stabilising or decreasing, people are sort of a bit concerned about that uncertainty how it's going to trade going forward. And uncertainty is, it's bad for deal making. So, when a buyer's looking at a business and they have that level of uncertainty, they reflect that in more buyer-friendly terms. Could be lower valuations from a lower multiple, could be lower earnings that they're going to value the business off, or it could just be negotiating term sheets with more buyer-friendly terms, earn-outs to sort of protect value and I guess protect against that uncertainty. Buyers are very careful around, taking more time to understand the business, more time in their diligence, takes more time to negotiate these terms up front. And as you say, time kills deals. So,
Daniel, have you seen any sectors that have had perhaps more or less activity in the past year that have been more active?
There's certain sectors that have strong contracted revenue streams. They have business models that don't really get impacted by economic cycles. SaaS companies, IT companies, there's been a bit of activity in that sector. Infrastructure services has been active. That's got a long contracted period with goods revenue streams. Financial services, wealth management, we've seen some activity. Probably the sectors that we haven't seen so much activity in is retail. Obviously, demand's been hit by the cost of living crisis, so retail's been fairly muted in terms of deal activity. I think health and education has probably struggled a little bit post-COVID, post-change in government policy. You've seen, for example, school lunches program change through education, gone up to one provider now, which has probably impacted 10 or 20 businesses that were providing food into that sector. But I think we'll probably see some distressed M&A activity in the construction sector going forward.
Well, even though construction has had a pretty tough time, that Tradeify deal looked like it had a pretty incredible return for Movac, but that's sort of at the intersect of construction and technology. So why has technology been a preferred purchase over the past year?
Technology has it's got a great operating model, business model. It can scale very quickly. There's good recurring contract revenue streams. As I said, scale is very important for technology companies, and Tradeify's in the UK, New Zealand, it's in other countries. So scale is important, growth, and those recurring natural revenue streams mean it's just a good place to invest monies for PE and other investors.
Andrew, we've spoken about volumes and how they're down a wee bit, but what about valuations? What are you seeing in that data?
It's a little bit hard to assess because of the low levels of activity in terms of determining valuations, but what we are seeing is slightly softer multiples on the back of higher interest costs, but also on a lower level of leverage being offered by the debt providers. But probably the material impact on valuations is companies' earnings, and the earnings have certainly softened across a wide range of industries in 2024, and that's probably having the bigger effect on valuations.
We've spoken a little bit about private equity, but it has become enormously popular in the past year and probably will continue to be going forward. Tell me about popularity in PE and your thoughts on it for the future.
Yeah, I think, look, at BDO, we're very, very bullish on private equity. I think it's definitely growing. So, what a sector in New Zealand that sort of had 5 or 6 players is definitely getting larger and more competitive. You've seen sort of wealth divisions set up their own PE funds. You've seen KiwiSaver funds set up. So Fisher Bunds has just set up their own direct investment team. You had Jarden with their principal investments team for a while. Obviously, Australian private equity firms coming over here and setting up offices because of the returns that New Zealand PE have been generating. So there's a couple of Australian PEs have come over and set up offices here, and BlackRock setting up an office here as well. So yeah, it's definitely getting bigger, and we're aware of other PE firms like trying to establish themselves. So it's a sector we think is going to grow, and that's why we're pretty focused on it.
Andrew, you're connected to BDO's global advisory network through your role. So what are some of the global trends that you're seeing in the market?
Now, so the global trends really mirror what's happening in the New Zealand market with lower volumes. It's important to note, though, that the lower volumes in 24 are still higher than pre-COVID levels. So we obviously saw the sugar rush of deals in the 22 and 23 year because of that stimulus, the financial stimulus the government provided. And we're sort of reverting back to a normal level now, but which is still higher than 21 and 20.
Looking to 2025 then, what do you think the year's going to hold for mid-market activity in this country?
It'll be more positive. I think, obviously confidence is returning. That uncertainty we've talked about is easing as interest rates come back. Demand is coming back from consumers. So I think businesses, in terms of their profitability, will improve, and that will be good for M&A activity. I don't think it'll come back as quickly as everyone thinks it is, unfortunately. I think it'll take some time, because if you think about that demand that's got to work its way through into businesses' P&Ls and their earnings stabilise, it needs to work through for a trend for businesses to be able to meet those valuation gaps that we've talked about. So I think, unfortunately, it'll take some time. But yeah, I think probably the second half of the year, you'll probably see a bit more activity. You might even see an odd IPO or two next year as well, potentially. But yeah, it'll be a busy year for private equity as well. I think they've got a lot of dry powder. This year's been, I guess, a lower year for you from their standards. So I think there'll be a lot more activity next year in that regard.
An IPO or two would be nice. I very much look forward to that if either of you work on that. Daniel, what are you specifically watching out for in 2025? Any specific trends?
I think in terms of sectors, I think we'll see food transactions be a bit more popular. Food has been a bit quiet over the last couple of years, but they managed to push through a lot of price increases. Food companies with strong brands in supermarkets, food suppliers. So I'm expecting to see a little more activity in that sector. I think your sectors in terms of IT services, infrastructure services will still continue to be strong. And I think we might see a bit more in the education sector as well, childcare, etc. Assets return to market post-COVID. And we'll see some more IMs that have been parked away for a couple of years return to the market. So old deals are reappearing as earnings stabilise.
Brush the dust off some old papers. Andrew, are you perhaps seeing more optimism nationally too?
Yes, I'm seeing and feeling a lot of optimism for 2025 medicine. Obviously, the interest rates coming down provides people with more confidence, but also government initiatives around supporting business growth are going to be felt really strongly in 2025.
Daniel, do you have any perhaps expert tips on any businesses looking into M&A activity for 2025?
I think you need to make sure you've got your strategy right at the start before you go hunting for opportunities in the market. You need to understand what you want to do with that business post-acquisition. You need to ensure you've got your funding in place and very thorough, deep DD conducted.
And you guys can help with that. Andrew, any tips that you want to throw in the mix?
I think, we're actively telling and informing our clients that it's a good time to buy, so a good time to do some transaction activity with valuations coming back a bit. So, yeah, we think it's a great time to be bold and do an acquisition. So, yeah, just careful planning, preparation, and, of course, having good advisors.
Some great tips up here, Andrew. Do you have anything else to add to that?
Oh, Madison, what the key is to be deal ready. So preparation is absolute key. You need to make sure your business is ready for sale, understand valuation, understand the process, and appoint great advisors to make sure you achieve your success.
Thanks, Andrew.
Thanks, Madison.
And thanks to Andrew and Daniel. Really appreciate it, guys.
Thank you very much.